Hello, everybody. This is the Bob Unger Show, and I'm very honored to have as our guest today Andy Schectman, who is the El Presidente of Miles Franklin, a company that buys and sells precious metals. And more importantly, what I admire about them is they educate their customers. And I think that's a very important part of the business because the average person who buys gold and silver, in my opinion, doesn't know why really he buys gold and silver. He may be going with a trend, or he may be reading about it in the news or seeing it on TV, but he doesn't understand the underlying foundational precepts which make somebody really understand why you would buy those precious metals. So Andy, just a little background about yourself. Where did you go to school and how did you go from there and get into this business?
Well, I went to the University of Minnesota with aspirations of being a baseball player, much like your son. And I hurt myself freshman year. Those aspirations ended pretty quickly. And in 1989, with a little bit of economics degree behind me, my father asked me to come start a new company with him. And I was 19 years old. That was almost 31 years ago, Bob. I've been doing this for 31 years. Never thought I would be in this business, but honestly, I found my calling. I enjoy what I do very, very much, and I feel that just a little bit I'm contributing, helping. The only rule that my father said I would need to follow in 1989 as a 19-year-old kid was that I would buy something every 2 weeks. And if I didn't, he'd fire me. I said, well, gosh, if that's the only rule, Dad, I can deal with that. And it was the best piece of advice that I've ever been given. The best gift that my father ever gave me was teaching me how to save. Gold and silver to me, Bob, are not an investment. And that's where I think people make the mistake. It's wealth. It's been wealth for 6,000 years. And I view it as wealth. And every 2 weeks for 30 years, I've accumulated, I've honored that promise. I've accumulated something without fail every 2 weeks for 30 years as my promise to my father and a promise to my family and myself. It is my wealth, and it is immutable wealth that I hope I never need to use. If I do, I'm darn glad I have it. If I don't, my children will inherit it. And I think that's the proper way to look at gold and silver, not as an investment, but as wealth that has lived through every pandemic, every hyperinflation, every Great Depression. It's lived through world wars. It's lived through everything and still maintains value to this day, and will continue to do so long after, which will probably be pretty soon, the dollar bills that we call money hanging, or that are in our wallet, right, rather, will be hanging from a frame in the Smithsonian. I think that's coming. I think that's coming real soon. And so for me, gold and silver, Bob, are wealth. Some people call it insurance. Some people buy it for the privacy. Some people buy it because it's an investment. For me, it's wealth, plain and simply.
When I went to college and took some economics courses, I never once learned a thing about the economics of gold and silver and real money as opposed to paper or fiat currency dictated by the government. Did you actually learn any of these concepts when you were in school?
No, I learned more in 6 months working at Miles Franklin in 1989, 1990 than I did in almost 4 years at the University of Minnesota. What is taught at the universities around the United States and around the world is Keynesian economics. What is taught here practically, more or less, would be the opposite of that. It would be the Austrian form of economics, where Keynesian economics is built upon spending and consumption. You have a blanket of debt that is being held up by the consumption and the spending underneath it. And we're witnessing what happens when you stop the spending, the debt collapses upon you. Whereas the Austrians would say, well, if you have a slowdown or a crisis, because like the like the Three Little Pigs, the pig that built his house out of brick. That is built upon savings, investment, and reinvestment. That's Austrian economics. No one in this country has any savings. People are indebted. No one owns anything anymore. They have mortgages and car payments and credit card payments and tuition payments and all of the debt that is normally held up by the consumption. When the consumption stops, the Keynesian experiment dies. The Austrian economics that just about anyone who owns precious metals should or ought or does understand is what I have followed and learned in real life, in real time. That the way to prosperity is through savings and investment and reinvestment, not through through greater spending and consumption. And it's just a rat race. And that's where we are in this country. Uh, whereas what I've learned at Miles Franklin is the brick house. You save, you put money away for a rainy day, you pay yourself first, and you reinvest in yourself, in your business. And that's the model that I have followed, luckily, for the last 30 years. But I learned it from talking with people like you and all of my clients and my father. And I've been blessed to have been shown the light. But really, most people in this country don't have a clue, because that is not what they're being taught by the schools in this country.
I find it interesting that unlike most sons or kids, you listened to what your father had to say. It made sense to you because it is logical, uh, but you didn't reject it. And so many young people today, I find they totally reject what their parents have to say. And I hear it all the time from people I speak to and friends. And their kids don't really have the respect for them to value their opinion and to at least listen to their dad with an open mind. And it seems that you did, or am I being too presumptive?
No, you're not. And I've noticed that myself. I watch what's happening in the public school systems. My youngest daughter is it's a project I'm working on, trying to let her be an individual, yet trying to show her that uh, the things that we're seeing now and the things that they're being taught aren't always correct. I don't know, Bob. I think I grew up in a different time. You know, I'm younger than you. I just turned 50. But growing up in the 70s and 80s, I look at my life, what it was like. I'd get up at 7 in the morning. I'd be out the door, dirty, playing outside, filthy, playing in the dirt, playing baseball, doing whatever. Wouldn't come home till dark, maybe call my parents and saying I'm meeting over at my buddy's house. Not a second thought. Freedom, no cell phones, no computers. It was just a better time. And I don't know, maybe people learned to respect authority better in that environment. Whereas now I look around me and I see what it's like to be a kid, and I'm not envious. I think it's a much harder time to be a kid. I think they're influenced way too much by social media and electronics. And that influence is having I think, a radical and not positive effect on a lot of the people nowadays, a lot of the kids nowadays, where, mom and dad don't know what they're talking about. I always listened to what my father said, but it resonated with me. Maybe I was just lucky that way. I don't know. To be honest with you, I was a normal kid growing up. I butted heads with my father growing up, and when we worked together, it was for both of us a blessing. It's been the best part about my job for the last 30 years. My father is my best friend. Don't tell my wife I said that, but my father is my best buddy, and we talk 4 or 5 times a day. I don't know if we've ever raised our voice at each other ever in 30 years. And I don't know. I accepted his ideology. I studied. I immersed myself in it. And when you hold a piece of gold or silver, Bob, man has been in search of it for 6,000 years. It's in our DNA. It resonates. And I don't know, it worked out well. You're right. I do believe what you're saying is true. I'm struggling with it myself right now with my three kids. Um, I was fortunate enough to grow up in a time where I don't know, it just seemed natural to listen to what my dad had to say, and it made good sense. And I look back at the last 30 years with great fondness. That it will have been the best time of my life spending it working hand in hand with my father. It's been great.
Well, that's really great to hear. And I think that our viewers who probably may not be able to define Austrian economics and may not really understand even Keynesian economics, you're referring to two opposing schools wherein the Austrian school is a free market school, which states that the interest rate, which is the cost of money, should be determined by the free market, not by men and not by the government. And if
Right,
you make a mistake in the business world, you suffer and you may go bankrupt. Joseph
right,
called that creative destruction. Whereas the Keynesian view is anything that's going to be successful must be controlled by the government.
the government. Right,
Of course, we've seen how successful that is. I mean, I mean, the idea that that is what the metric for success is in the eyes of most people is a very sad commentary. I always tell people, just look at the results. You don't need more than that. Just look at the results. So,
well, I would argue that it's that manipulation of interest rates that has got us in this problem. The
sure.
manipulation of interest rates has created the distortions that we see in asset prices all around us. And there are very few safe places to go anymore, Bob. In fact, they used to call it, when I was younger, risk on, risk off. That stocks were risk on and bonds were risk off. They were inversely correlated. They aren't anymore. In fact, there's a group out of Chicago called Ibbotson, Ibbotson. They were bought by Morningstar. And Ibbotson was tasked with finding inversely correlated assets to the US stock market. They couldn't find any longer, with the exception of precious metals. Stocks and bonds are now positively correlated because of the manipulation, like you were saying, of interest rates. They weren't allowed to trend higher freely by the market. Instead, they have been manipulated lower by the governments to create a perception or an illusion of wealth in our 401ks and in our homes. And those low interest rates have created great anomalies in price and distortions in economies. So you're right. You don't have to look any further than the manipulation of interest rates to underscore the difference between Keynesian and Austrian economics. And of course, bailing out the banks. Well, there you go. And the big corporations that have no business being bailed out, but they were. And that's why we are where we are right now, on the precipice of disaster economically.
A great example, Andy, of what you're talking about is my mother. My mother was a widow at the year 1976. And they never had any money, my parents. We all lived in a one bedroom house and I slept on a couch my whole life. And I didn't bother me a bit. I was happy as could be. And she took the money from my father's insurance policy and got a 15% 10-year CD, the bank. And believe it or not, that 10-year CD of a very modest amount of money was enough to live on for her family as a widow. We had food, we had steak, we had flounder, we had halibut, we had delicious fruit and vegetables. Could you imagine how much money you would have to have today at the interest rates, which are practically non-existent, in order to provide that for your family now? You'd have to have the millions.
Well, actually, right now, when I go back to the early 90s, let's call it 7% interest rate, you'd make $70,000 a year on $1 million invested. So you'd save your $1,000,000 at buying US treasuries. You'd make 70 grand a year. So you put 2 million in and you'd get $140,000 a year that you could spend on and live perfectly fine without ever touching your principal. In order to get that same $70,000 a year, now you would need to invest $10 million instead of $1 million. And that's just in the last 30 years. So the numbers are way too big to make anything in the form of a return. This is forcing everyone into speculation, which is creating the distortions in asset prices, stocks and bonds and real estate. And yeah, the inability to make any return safely in the treasury market has certainly changed the landscape. And I ask myself, who in their right mind would buy a treasury right now earning between 6 and 0.7% from a government that is all but insolvent and is committed to running high levels of inflation? It is a guaranteed form of confiscation. Right mind would, and the question is answered by one answer and one answer only. It's the Fed. They're the only ones who would be naive enough, in my opinion, to buy those bonds, which brings us to a very sticky wicket. They have two choices. They continue to monetize, which leads us down a Weimar Republic rat hole, where they monetize to buy the back end of the bond market to keep interest rates low, to keep the game going. That monetizing creates massive inflation, ultimately, which then raises interest rates. Or they back away from the bond market and they say we have to let it correct under its own weight. Now you witness the greatest depression of all times in interest rates that spike immediately. You see, both roads lead to the same place, higher interest rates and a
And
collapsing economy.
Andy, did you notice in the debate between the two geniuses running for office, did you ever hear them mention in that debate the Federal Reserve? I never heard.
No, or the debt or anything that's important. No, I
Right.
haven't.
Isn't it interesting how those fundamental issues are not allowed to be talked about, and nobody wonders why that is? But getting down to the more basic for people that may not have yet purchased precious metals, why would you, talking to the average guy or girl out there in the street, why would you tell them that it is essential for everyone to have a certain percentage of their money or their savings in precious metals?
I think I have to answer that question maybe just a twinge bit more sophisticated than the average person on the street. But I say this to everyone. To me, last April 2019, the most important event of my 30-year career happened, and yet no one knows about it. This is our stupid media who doesn't tell us anything important. And they ignored what I consider to be, without question, the single most watershed moment of my career. And it happened in Basel, Switzerland in April of 2019. But let me take you back to 1944 first, and then we'll come back here. In 1944, the end of World War II with Bretton Woods, the world agreed that the US dollar would be the world reserve currency and the petrodollar. And they anointed the US Treasury bond as the only tier one asset in the world. A tier one asset, if you Google it, at least by central bank standards, is a riskless asset. You could also argue that they would accept fully funded and escrow dollar accounts as a tier one asset, and I would agree with that. So let's just simply say that since 1944, the only tier one assets in the world were US dollars and US treasuries, considered riskless. And if the Bank of England was trading with the Bank of Switzerland, they wouldn't use pounds or francs as collateral, it would be treasuries. At the end of 2017, you could have looked back and said for the last 70 plus years, 73 years, the central banks in general have been net sellers of gold. And I would have agreed with you. I could never understand why the hell they were always selling their gold. Never made sense to me. Well, there were four reasons why they were all selling their gold. Number one, it paid no interest. Number two, it was unpredictable in its movement. Number three, it cost money to store it. But the biggest reason was its tier three status. Gold was a tier three asset, meaning only 50% was calculated on the balance sheet. So the banks would have no reason to own it because it cost money to store, paid no interest, was unpredictable, and only 50% was calculated on the balance sheet. So let's get rid of it and buy treasuries, which are tier one, which pay interest, which cost no money to store, and are predictable. So you would see a drive from all the central banks to sell their gold and buy treasuries. Never made sense to me. In 2018, Bob, something very interesting happened. All of a sudden, the Western central banks bought more gold as a group than they did in the 60 years previously combined. Just like that, all of a sudden, straight up. In 2019, those numbers were up 90% and continue unabated higher today. In April of 2019, the Bank of International Settlements, which is the central banker's central bank located in Basel, Switzerland, came out with the Basel III Accord. And it was a decision that levied gold to tier one status. The only other tier one asset in the world next to US Treasuries. You have the most sophisticated, well-funded, well-informed, and influential traders on the planet who quietly said, gold's now a tier one. But a year and a half before that, they started front running that decision and massively accumulating. So you now have a system of de-dollarization by the world's central banks and a massive accumulation of gold as a riskless asset. They wouldn't have done that if it weren't going to be a central theme or central figure in what comes next. Bottom line is, when you have that level of sophistication making a once in 75-year change and elevating gold as the only other tier one status in the world, it tells me what the long game is for gold. And then you look at how they front ran that decision. And if you look from end of 2018, or even if you want to go to April of 2019, when that statement came out, look at what gold has done since then. It's outperformed everything. And I think you will see it continue to do that. The only difference is, I think, in the last several years, we've seen gold move up in a linear fashion. I think you won't see that any longer. I think you'll see something more along the lines of chaos theory. You'll see things more like we saw in July, where silver was up $10 in 2 weeks. I think that's what you'll see. But the bottom line is that the most sophisticated and well-informed players in the world call gold riskless and have been wickedly accumulating it and shedding dollars. That's why people need to own it. It is wealth, and it is being accumulated by the most powerful people in the world who call it riskless. And as an alternative to US treasuries and US dollars, which I would argue are hanging on by a thread. In fact, brings me to one other point. I gave a talk in Vancouver a couple of years ago, and I used a chart. The chart was a letter that was put out by JP Morgan Private Wealth. JP Morgan Private Wealth is the division of JP Morgan that works with the wealthiest people in the world, the centimillionaires and the billionaires. And that letter, I showed it at the Sprott conference. A client of mine sent it to me, who's a member of JP Morgan Private Wealth. It blew everyone away. Basically said to all of their depositors that they showed a chart going back to the 1400s of all the world reserve currencies and how they all died after 40, 50, 60 years, they were all dead. Showed the dollar at the end of that rope. You go back to 1971 when we left the gold standard, becoming fully fiat. We're at the end of that line. And it basically said, we want you to mitigate your exposure to US dollars through foreign currencies and precious metals because we believe the dollar will be challenged for world reserve status. So the bottom line is simply this: everything is falling into place. You have the talk of digital currency. You have gold being reclassified as the only tier one asset. You have economies of the world blowing up and all but begging for the reset, start over. I think gold will be part of the reset. It will be part of a new system. There's no other reason other than an escape valve to reclassify gold after 80 years of it just being treasuries as the only other tier one asset in the world. Why not do special drawing rights from the International Monetary Fund? Why not do euros? Why not do yen? Choosing gold, to me, shows very clearly what the central planners have in store for us. So that's why people need to own it, because the wealthiest people in the world are telling you you need to own
Let's
it.
expand on the word you just used, the reset. The World Economic Forum is entitling their conference in 2021 that is scheduled. They're entitling that on their own webpage, The Great Reset. And there are a lot of people that are questioning me and asking me, what do I think that term means? When you hear that term, what does that mean to you?
Well, I'll answer that by saying, did you see what the International Monetary Fund came out and said last week, Thursday or Friday? Go to their webpage, go to the IMF's homepage, and what you will see is a speech by one of their leaders. And she says, it's time for a new Bretton Woods. So now you have the IMF saying time for a new Bretton Woods. When I think of reset, I think of all of the Western economies being clubbed over the head by COVID and the reaction of their governments to lock things down. It makes one wonder. I mean, I'm not trying to be conspiratorial, but I can't help but wonder. It just seems so quaint how frightens everyone enough to where they will acquiesce into wearing masks and being holed up and shut down, which simultaneously destroys every economy at the same time. And blame can then be shifted away from where it should be placed towards either the Chinese or the virus itself, or however you want to classify it. I'm just simply saying it's hard for my brain to not go there, because you blow up the Keynesian experiment and everyone starts over. Everyone starts over under a new system. And let's not forget, supposedly COVID can live on paper currency. So now we go to a cashless system, which is what they've wanted for a very long time. You go to a cashless system, I would argue backed by gold or pegged to gold, not convertible. Maybe 10, 15% of every new Fed coin will be backed by gold, or maybe it's the new currency issued by the BRICS nations. We'll have gold pegged to it to give it some sort of tether to a system that won't allow governments to inflate away the value. And I think that the custody of that gold will be denoted on a distributed ledger. And I look at a system where everyone will agree to a reset because they've all been affected the same way. And if you want to call it coordinated, I'd believe it. It just seems so hard to not understand that.
Would you analogize that to Roosevelt back in 1933, raising the value of gold relative to the dollar and thereby diminishing the burden of debt payments by having the debt be paid in less expensive dollars than prior to the revaluation of gold?
For sure. For
Similar
sure.
to
I mean,
that.
that's what they're trying to do right now. Absolutely. Absolutely. They're trying to do, and it was very disingenuous then, and it'll be very disingenuous now. The Fed certainly wants inflation. It's another reason to think that gold and silver will go much higher, because that's typically how you measure inflation, by commodity prices, in particular gold and silver. And this is why we're hearing the Fed talk about a digital currency. They want to inflate things away. They want to inflate that mountain of debt away. Look, it took 300 years to create 800 billion in wealth in this country. The Fed has created 9 or 10 trillion in the last year, but they can't get inflation. I mean, there's inflation in certain areas, in asset prices, in tuition. $70,000 to send my son to the University of Michigan. There are asset price or inflation found in certain areas. Go to the grocery store. I spend $200 every time now. Never used to spend 200. There is inflation, but not the kind of inflation that they want. And that's because when the banks, without getting too technical, when the central bank monetizes and does quantitative easing, and they buy bonds from the commercial banks, that money does not get transferred to the commercial banks. It goes to the Federal Reserve's member bank, who holds it in a reserve account for that bank. So let's say it's Wells Fargo. Let's say they buy $100 billion worth of bonds from Wells Fargo. Wells Fargo doesn't get that money. That money goes into a reserve account at a member Federal Reserve Bank with their name on it. And the only way they can access that money, now that's actually deflationary, because it's pulling money out of this liquidity out of the system. The only way they can access that money is through lending, creating loans. But no one is lending, no one is borrowing. And so the velocity of money is ground to a halt. The commercial banks aren't playing ball with the Federal Reserve, and they're not expanding their balance sheets, which have been decimated by COVID. Half of the the loans that these banks have, they were already in a sticky wicket with the repo market issue in 2019. Your listeners want to Google 2019 repo market. You'll have enough stuff to read forever to lay the foundation. But the balance sheets are in tatters. And now it's even worse with all of the corporations they've lent money to going bankrupt, already gone, or hanging on by a thread. And so the banks aren't lending, so the money, the velocity goes nowhere. So the Fed says, here's what we'll do. We'll create a Fed wallet, which allows us to put money right into everyone's pocket, usurping the commercial banks. Now you get wicked inflation, and you water down your currency to pay off that debt in less expensive or cheaper dollars. And I think that's exactly what we're seeing. And anything that is being told to us is less than genuine. And what Roosevelt did in 33, cost everyone 40%. Whoever didn't turn in their gold got 40% less once gold was revalued. So I think we will see more of the same. That's the playbook that the governments have chosen over, excuse me, austerity, tough decisions, raising interest rates, cleaning up the balance sheet. Those decisions, they don't get people reelected. And you saw what happened in 2018-19 when they tried to raise interest rates. The market started to collapse, and they gave up on it after 2 or 3 rate hikes. That was it. The Fed will never normalize their balance sheet, ever. And it's inflate or die. Problem is that inflation isn't getting out into the system because the banks aren't cooperating. So the Fed has a workaround, and that's the new digital Fed wallet that you're hearing about. If that happens, that is the lighting of the fuse to create massive inflation here in the real economy.
Andy, let me give you a couple of questions as we head towards the end. People ask me all the time, how could gold be a good investment now when it's already gone up almost double from where it was 5 years ago? That's one question they ask. The question they ask is, what do you recommend in terms of gold vis-a-vis silver, vis-a-vis platinum and palladium? Do you believe in overweighting in silver is appropriate? And how do you jigger all that together?
Well, gold isn't the screaming deal that it was. It has gone up. It's gone up, however, in hugely inflated dollars. If you talk inflation adjusted dollars, it was $850 in 1980. $850 in 1980 would be worth way more than 1900 today. I don't know the exact figures, but the inflation adjusted figures, my guess would be north of 3,000 or 4,000. Silver, even more so. When you talk about silver in 1980 being $50 an ounce, the adjusted price for inflation should be wickedly higher. If you take 1900 and divide it by 45, which has been the average ratio for the last 150 years, you got silver north of 45 bucks, 50 bucks, whatever it is, should be there right now. Bottom line is simply this, is that I think because you have gold reclassified and the central planners are accumulating it, it will go higher than anyone thinks possible. I think that the dollar in which we measure our stock portfolio in, this high stock price here again, everything is measured in inflated dollars right now, in dollars that have been watered down tremendously. I don't think on an inflation adjusted metric that gold is anywhere near too high. It's going to go much higher, but it's not the deal that silver is. Silver is the real deal. Silver I look at as the best investment on the planet. Silver is the only commodity in the world really that has a tremendous industrial component, but also a 6,000-year history as a monetary asset. You look at something like copper, that's pure industrial. You look at gold, that's almost purely investment. Silver is both. And silver has tremendous amount of uses in the industrial space. Every new construction project in California after 2020 has to be solar, which already accounted for 20% of all the use of silver mined. And when we talk about silver priced at $25 an ounce, I look at it as the most undervalued commodity on the planet, period. I think that it's a home run waiting to happen. Now you take a step back and realize that JP Morgan just settled a $1 billion fine for manipulating the gold and silver market. And they had accumulated over north of 700 billion ounces of physical silver off the exchanges, most of it, through all of this. That's 7 times what the Hunt brothers tried to buy. They have accumulated over 25 million ounces of gold. That's the single largest physical position of metal the world has ever seen, as they have pled guilty, more or less, admitted guilt to manipulating the prices of the gold and silver market. So when you look at a bank like JP Morgan and you look at a group like the central banks, here again, you have the most sophisticated, well-funded, well-informed, influential traders on the globe massively accumulating it, allowing it to rise in a linear fashion slowly by suppressing the price. You pull that suppression out, and all of a sudden you're going to see chaos theory. You're going to see gold and silver go up tremendously. I think that gold and silver will go higher than anyone think possible. I think the real value is in silver. But when we look at a ratio of gold to silver right now of about 80 to 1, that's rarefied air, Bob. In March of this year, 120 to 1 happened. It was the greatest disparity between gold and silver in human history ever in 6,000 years. Geologically, silver is 15.5 times more abundant than gold, always has been since the beginning of time. For most of history, silver was 16 to 1 ratio. 16 ounces of silver, about 1 ounce of gold. Once we hit the Industrial Revolution, over the last few hundred years, that ratio has been about 42 to 45 to 1, meaning 45 ounces of silver buys 1 ounce of gold. Right now, it's about 80 to 1. My friend Keith Neumeyer, who runs First Majestic Silver, one of the biggest silver mining companies in the world, he'll tell me, and publicly, people, that it's what they're pulling out of the ground right now is about 6 to 1. And that's because silver is found in nature in a form called epithermal. It's found very close to the surface. So decades ago, without the sophisticated machinery, all of the big deposits were found. So there have been very few big deposits of silver found for decades. So the bottom line is this: at 80 to 1 ratio, that's 4 feet of snow in the Florida Keys in August. It's highly unusual. The last time we saw an 85 to 1 ratio, with the exception of the last year, was 2010 for a brief moment. By 2011, you had $1,920 gold and $50 silver. That's about 37 to 1. What I'm getting at is this: the real value right now is in silver. I do believe, especially because gold is now the only other tier 1 asset, that ultimately the place you want to be is gold. You go back to the beginning of time, gold and silver have a 90% correlation in movement. Typically, however, gold moves first and silver moves much further in terms of a percentage gain. My advice to people would be to go much heavier on silver. And when that ratio snaps, which it will, ratios always do, the further away you get mathematically from established averages. We can use baseball as an example. If your favorite baseball player who gets 600 at-bats in a season starts out April batting 1,000, 40 for 40, you know that by the end of the year, they'll be closer to 300 than to 1,000. That is the law of averages, how it works. The further away you get from established averages, the greater the magnetism that pulls you back. We're way far away from what the historical averages between gold and silver are. We're way far away from what's coming out of the ground. When that ratio snaps back, then you switch into gold. So let's look at it practically. Right now, 80 ounces of silver buys 1 ounce of gold. So you buy 80 ounces of silver or 1 ounce of gold. If you put it all into silver, when that ratio goes to 40 to 1, you can trade your 80 ounces of silver into 2 ounces of gold. That ratio will snap back. And I think the real value right now, by at least a factor of 2, is found in silver. Platinum has the same argument. The only thing is platinum doesn't have the monetary history that gold and silver do. Platinum's been used throughout time, in Russia in particular, with some monetary components. But in reality, platinum is an investment. Gold and silver, to me, are wealth. For your listeners looking for the best value, it's in silver. But I would not bet against gold simply because you have the central banks of the world accumulating it. What I just was told.
Parenthetically, Andy, do you know that Abraham, when he bought the grave in Hebron for his wife Sarah, guess what he used to pay for it? Silver.
16 pieces of silver.
That's right. So
So,
Abraham was pretty smart.
well, I'll tell you, I listened to Andrew McGuire the other day on my friend Chris Marcus's show, who you know,
Yes.
and he said something very interesting. He said that for the first time in his career, he's seeing. Now Andrew is a very plugged in tune, big time wholesaler, and in Europe. And he said for the first time in his career, he's seeing the Chinese going into the Swiss refineries and buying up massive quantities of silver. Silver is a buying opportunity of a generation. Bob, I've one of the things that's made me successful is being objective. And I look around me and I think to myself, if I had 20 million bucks to spend, where would I put it? Would I put it in stocks at the highest level really ever in history of the Dow Jones with 40, 50 million people unemployed with what we see coming down the pike? Would I put it in the bond market at the tail end of a 25-year bull market where interest rates, when factored against inflation, are negative? Who in their right mind would buy bonds at zero? I mean, it's just plain out stupidity. Would I buy real estate that is a function of those low interest rates and easy money? No, no, and no. Where do you put your money? Some may say cryptocurrencies, way too speculative for me. Um, the only place that makes sense to me is commodities, and in particular, gold, silver, and platinum. I could argue that commodities in general have the best value. And we're beginning to see them break out. We're seeing the wheats and the grains and the natural gas. I think you'll see oil break out. You're seeing the commodities break out. And it's right on the precipice of breaking out to where the funds are going to start jumping in. We already are seeing the big hedge funds and the Warren Buffetts and the Ohio Police and Fire and the 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 big money dip their toe in the water. The Ohio Police and Fire put 5% of an $8 billion fund into gold. Warren Buffett put 2.5% of Berkshire Hathaway. And you're seeing a lot of these other sages and very successful money managers do the same thing, just a toe. But when that goes in up to the knee and up to the up above their waist and they jump in with both feet, people will realize very quickly that the commodity index in and of itself, and in particular gold and silver, is a tiny, tiny little market. And it doesn't take but a massive influx like this of investment demand, which has been lacking from this industry for quite some time, to radically change things. And I think that will happen. I think we are on the precipice of that because it's very difficult to find value any longer. It's still to be found in commodities, and in particular in gold and silver. I think people need to own gold and silver because all of the asset classes around us have been exploited by easy money and low interest rates. The one exception, to me, in my mind, are commodities and precious metals. So that's really why people need to own it, to divest of dollars, to mitigate their exposure to a currency and a system, a whole ecosystem that one could argue is on its last leg. And as the International Monetary Fund just came out, in need of a new Bretton Woods. Well, if that's really the case, after they've already reclassified gold as an alternative to treasuries, the writing is on the wall. People need to open their eyes. Yes, I sell precious metals. I've been accumulating it for 30 years myself. I buy it every 2 weeks. I'm proud of my company. We've never had a customer complaint. We've done 6 billion in sales and done it the right way. A+ rating with the Better Business Bureau. One of only 24 companies in the world approved by the U.S. Mint. Licensed and bonded in the only state in the country that mandates that. All of those things are true. I'd still tell my best friend, even if I told him to buy it somewhere else, you have to have gold and silver right now, more so than ever, because having all your money tied up in dollar and dollar assets is a fool's errand right now. It hasn't been for the last 80 years. Those days are coming to an end. Everything good comes to an end. This year has been about change and awakening. And I think people need to not have such a short memory. Most people have forgotten that the stock market fell by 40% in March, like that. It'll happen again. And when it does, it'll be more violent. And there are no places to safely park your money any longer. Everyone needs to have something outside the system in precious metals.
So Andy, as we conclude, tell the folks, number one, the services that Miles Franklin provides, as well as the products, and tell them how they can get a hold of you.
So they can always reach me at 1-800-255-1129. 1-800-255-1129. That's my direct dial. Bob, we're not an online company. I've chosen to go that route, at least for now, because there is so much identity theft out there. I've met with the FBI on several occasions. I've talked with them about the state-sponsored Eastern European hacking and a campaign that is centered on the precious metals industry. It is for that reason and others that I have chosen to still do things old school. We are analog in a digital world. I believe in talking to people and in relationships, and where I think we are going, that's never been more important. I could spend in your mind about the things I've seen over the last 20 years, 15, 20 years with the proliferation of the internet and the sophistication of hacking. It's unbelievable the things that I've seen in identity theft. So we're not an online company, but in all the podcasts I've done, almost 90 since March, I've told everyone who's interviewed me that we'll beat any price out there. Price is not an issue.
You
So the
also
best way to reach
provide storage as well.
we do. We have storage. We have worldwide exclusives with Brinks. We are the only company that they've extended a fixed rate to in terms of storage. In other words, every other storage facility charges a percentage of asset value. And that's because if what you're storing goes up in value, so does the cost of it. Well, we negotiated a fixed rate with Brinks based on the number of ounces people store, not the value. And so we can beat anyone in the country right now easily, and it'll never go higher. Everyone else, let's use silver as an example. It was 12 bucks an ounce in March. Now it's 25. Your storage would have doubled with any other storage company in the world, including Brinks, unless you're in our program. With ours, it stayed the same because it's fixed. So we have relationships with Brinks in New York City, in Salt Lake City, in Los Angeles, and our bellwether program is in Canada. We have it in Montreal, Vancouver, and Toronto. In Vancouver and Toronto, we have our other North American exclusive, and that is Safe Deposit Box program. We have the only fully insured safe deposit box program that is non-bank in the United States, in North America. It's in Toronto and Vancouver. It is 100% not reportable to the federal government on FACTA, FBAR, or 1040. It's invisible. It is brand new state-of-the-art one-key safe deposit boxes that we developed. Only one key, not two like you normally do. They put one in, you put one in. One key, you hold the key in the spare. Contents are fully insured. You get a certificate of the contents. If you can't go up there, it's done under camera by two Brinks employees, and then they send you back a certificate and your keys. We're very proud of our relationship with Brinks. So between storage, whether it be in the US or Canada, or securing product at the best rates in the country, and our new soon-to-be new loan program in those facilities where we will unlock equity, call it equity exchange, where up to 75% of the stored metals in one of our facilities we can unlock that equity and give people up to 75% of that value, up to 9 months at a time. These are things that we do. Our primary business, of course, is procuring and either sending directly to the public or storing on their behalf in segregated accounts, precious metals. And so storage, precious metals, and loan against would be our three primary businesses.
Well, Andy, I thank you very much for teaching us tonight some very important concepts. And I appreciate your time, and tell your dad, David, that he has accomplished the job well done.
Thank you.
He's a good son and has passed down a lot of knowledge, and everyone should be so lucky to have a son like you.
Well, you're really nice to say that. I appreciate that. And although I don't know Adam, your son, very well, I've had the pleasure of meeting him, and without going into his accolades, I can tell anyone listening that he's a pretty darn impressive young man himself, and someone I'm sure you're very proud of. I appreciate you saying that. I know my father will too. I appreciate this forum to talk to people. I welcome your listeners to email me at Andy@MilesFranklin. I'll make sure that I reply back personally. I can send an inventory list showing that we will have the best prices in North America, the best programs. Our website is milesfranklin.com. Our two storage websites, Bob, real quick, are preciousmetalstorage.net, preciousmetalstorage.net, and privatesafedepositboxes.net, privatesafedepositboxes.net. Brinks wanted us to have two websites for the two specific programs. So we have three websites, a little confusing. All of those are found on our Miles Franklin website. But I do appreciate it. I hope to speak with some of your listeners. I'd love to come back again and talk about what's going on in this industry. There's lots to talk about. And I think with maybe well, for sure, the most important election in my lifetime coming up on the horizon, there'll be lots to talk about towards the end of the year. So it's wonderful to see your face again, albeit on the Zoom. I do appreciate this conversation, the opportunity to talk with you. I hope we can do it again real soon.
All right. Well, thank you. And God bless you and the family. And we will be talking soon. You take care.
God bless you and your family as well, Bob. I look forward to that. Thank you.
Take care.